Hi, everyone. I'm Marika Thorman. I'm the Vice President of Development at Fathom Companies, and I'll be your moderator today. There are plenty of seats sort of all throughout, so please come on in. We're excited to get started here. I'm going to let each of my panelists introduce themselves, but there's also detailed bios in your programs if you scan your QR code if you would like to learn more. We're going to be talking to you today about construction outlook. We're going to be looking to the 2025 year and then ahead to 2026. And I'll now turn it over to my wonderful panelists to introduce themselves. Go ahead, Dave.
Good afternoon. My name is Dave Thomas. I'm the Regional Director at Kinsickly Construction. We are a employee-owned, fifth-generation family-led business. We employ about 150 people in Maine. Proud to say that many of those folks are tradespeople that physically do the work in the field. We do a lot of work in the city of Portland, a lot of urban development projects, historic restoration work, office and hospitality projects. We also are working in the academic, healthcare, life science, and energy sectors. Happy to be here today. Thank you for having us.
Nice to be here with you, Dave, Marika, Ron, all of you. My name is Drew Wing. I'm the president of Zachow Construction. We're a 57-year-old Maine-based company. We work across multiple sectors. We have about 60 employee-owned team members, and really happy to be here with you and share our experience today.
Hello, everyone. I'm Ron Milley. I'm the owner of Consultant Services. We do construction loan monitoring for over 50 lending institutions throughout Maine and New England. And I'm very happy to be here today. Actually, when Dave and I started our careers together 25 years ago at a company, Granger Northern, our first boss told us that you wouldn't get any respect or nobody would think you knew anything until you have gray hair. Well, I got the gray hair. I think Dave's the only one who knows anything, but we'll, as you'll see today. So we're happy to be here.
Awesome. So I actually realized I don't have the clicker. So the panelist presentations in the afternoon this year are going to look a little different than last year if you were here. We're going to start with data presentations from each of our panelists that dive deep into the information and analysis of the construction sector. And then we will have the second half of the presentation be a moderated question and answer session. So we're going to start, and each panelist will go through. And Dave, you are getting us going, so I'm going to flip the slide. Okay.
Great, thank you. So I'm going to start with the answers to the test. Maine, in the next couple of years, is probably going to experience some modest growth, but not as much growth as other parts of the country. And I wanted to take the opportunity to talk a little bit about what's happening outside of the state of Maine, and how it's going to influence the work here in the state. So projects right now that are moving forward, the labor availability is a real challenge. And projects that have financial viability and that have a predictable and timely permitting process are the ones that are getting into construction. And I think that's really important if you have a labor-constrained market. You want to make sure that there's some predictability, so the folks in the built market can plan for that and can certainly work their schedules to accommodate the developments that are occurring. The graphic up on the screen here is from the Associated Builders and Contractors National Organization. In 2025, there were 439,000 construction jobs short of the demand for construction in the United States. I think a lot of people have heard about the labor shortage. One of the statistics that really jumped out at me recently was by 2031, 40% of all the tradespeople in the country will be at retirement age. We have certainly some short-term challenges there. There is a lot of energy behind getting younger folks into the trades. I'm going to talk about that a little bit further down the line here. But I think that it's important for folks to understand that that is going to be a short-term challenge in the coming years. The next two slides are really national kind of views of the different market sectors and what we're seeing over the next few years. So this slide that we have up is from AIA. It's a consensus document that is pulling data from several different sources. And then the next slide is from the AGC, Associated General Contractors of Maine, national survey for all the contractors. The two key points here are that the drivers for construction right now are data centers and the infrastructure that goes along with it. So really goes along with the presentation that we heard this morning. The statistics that I pulled up were very similar to what the speaker said this morning. There's $650 billion of capital expenditures that are going to occur in 2026 for data centers from the four companies that were described this morning: Microsoft, Amazon, Google, and Meta. You know, what does that mean for us? Well, it means that all the equipment that goes into those facilities, the manufacturers of that equipment, is going to be a bit of a challenge, right? So think emergency generators, transformers, switchboards. That's going to be a strain. The other strain is they're going to pay a premium for tradespeople to be on their sites. So we're going to think a lot about the specialty trades, specifically electrical contractors, HVAC contractors, and where they may be moving towards from a work perspective. So those are some major factors that I think folks should be thinking about. The second piece of this is that healthcare is the next sector on the list, and I think that it's important for people here to understand that healthcare isn't necessarily the healthcare industry isn't necessarily one that is a profitable industry, but we're in a situation from a demographic standpoint where we have to build, we have to accommodate what is happening to our people out there. So healthcare is going to be a continuous driver, and with technology changing, there will be different kinds of facilities. There may be more outpatient facilities. There may be more specialty spaces within acute care hospitals, something we really need to pay attention to. Certainly we have our challenges in the state of Maine, being a very rural state and being one of the oldest states in the country. So looking ahead, what does all of that mean? I just hit on demographics a little bit. I think it's important to really think about that and what it means to our state. So I heard we were at a dinner a few weeks ago from the Associated General Contractors of Maine, their annual dinner, and Amanda Rector, state economist, was talking about the population in the state of Maine. And we actually had a little bit of an increase in the population in the state of Maine a few years ago in migration. And with that population that came into the state, the average median age actually dropped a little bit, because the average age of the folks that were coming in were about 31 years old. So if you think about what we need to do to accommodate having more folks come into the state of Maine, right? We need housing, right? Which we're certainly going to talk about here today. We need education, for folks that want to have a family, and we want to have good health care. So I think that there's a lot of really good momentum behind the housing. I'm not going to speak specifically to that because this team here is going to hit on that. Education, we have an aging infrastructure. The governor just had a commission put together a report. I think they just identified there's about $11 billion in replacement or renovation work for all of the schools in the state of Maine. If they were to put a number on it today, that's a real challenge. We as a state have to figure out how to create some sort of sustainable funding mechanism to address bringing our schools up to speed with the rest of the nation. And then from a healthcare perspective, I just mentioned, we really do need to continue to build to accommodate for the demographic. We need to help our hospitals be successful. And as a rural state, we're real challenged. There's certainly funding that has come available recently to to accommodate some of the healthcare work. There's been some more money that's been injected from a rural hospital perspective, but I certainly think that we need to put some focus on that and how the hospitals get reimbursed. Finally, there's the rest of this list here. I think what's important to state here is that a lot of these other sectors are really reliant on, the lending institutions, and I think you heard earlier today, interest rates and where they are. Projects aren't penciling out unless there's some sort of subsidy. So really need to think about, what the financial viability are of the projects with or without a subsidy. And then I'll hit really quickly on mission critical or data centers. There's been some stuff in the news recently about some potential data center projects in the state of Maine. I think that there's certainly opportunities throughout the country for data center construction perspective. I know there's one in Lewiston that was proposed. There's one recently in Sanford, I believe, that was proposed. So that needs some regulatory or policy evaluation or approval to move forward. So that's a bit of an unknown for the state of Maine.
Awesome. Thank you, Dave. So Dave just gave sort of a regional, national perspective of looking back and looking ahead. Ron's now going to dive into a more sector specific of the projects that he at Consultant Services works on to give a little bit of a different lens, mostly specific to Maine. So I'll turn it over to Ron.
Thank you. So when we started going through what to talk about, the team asked me to pull together what my data that I have for the projects that we work on for the banks. So certainly these slides are representative of just the work that we're involved with, not statewide. But what we did is we broke it up into the sectors of the jobs that we work on. And just a couple things I'll point out is, for instance, metal buildings is a small percentage, but that's still predominantly storage units, which are still booming, which is interesting because it's just been a field that's been around for a long time that you'd think would kind of get saturated, but they're still building a lot of them. Another thing is the childcare, of course, is the state grant that we've been working on with CEI. But I guess what we decided to focus on was housing, which not surprisingly turns out to be like 31% of the work that we've been involved with over the past, in the recent history over the past 4 or 5 years. Excuse me. And of course, we all know that there's a large housing shortage. And if you go to the next slide, Marika. Just in the projects that we've been involved with since 2021, there's been 2,900 units built. And this is just kind of showing you the graph of that and through each year. And it's mostly been, new construction apartments throughout the state and throughout New England. The next slide is showing, the thing is our data can be a little skewed because there's limited projects, but as you can see by the slide, the residential average cost of construction is just pretty much doubled in the last like 4 or 5 years, which we just wanted to show you that. So sorry, I've been sick the past couple days, so I'm struggling. But Drew is going to talk a little bit more about how those costs have been trending up and dive a little bit more deep into that. The next slide is the average cost per unit, which pretty much shows the same thing, that it's been doubling over the past 4 or 5 years. And I will turn it over to Drew.
Yeah, Drew, go ahead.
Okay, great, thanks, Ron. So this slide is really just a look under kind of the hood of Zachow Construction. So what really is one company, one construction manager serving really the greater Portland area, what have we experienced in 25 and what are we expecting to experience in 2026? So I'll start off by saying I think a lot of us know that 25, there was a lot of uncertainty and we weren't sure how things were going to shake out. Overall, it ended up being a very good year for us. We did our greatest volume ever in 2025. And I think you can see kind of from the slide that happened working across multiple sectors. So, and quite a few projects happening. So it took a lot to put together a really solid year. And I think our success was based on the variety of the projects that we're able to bring to market. I think the other piece to highlight here is the strength of project teams. The projects that advanced in 2025 that got to the finish line, or I should say the starting line of starting construction, had really strong owners, design teams, and a pre-con team that were aligned in terms of schedule, budget, and their programmatic goals. And they were super disciplined in adhering to those kind of where they wanted to go with those projects up front and driving towards that. I think looking forward to 2026, again, a little different than what Dave is saying is happening nationally. We're projecting significant growth here, which makes you ask what's going on in Maine, what's going on in southern Maine if Zachow Construction is projecting potentially 30% growth. And this growth projection is based, it's not totally theoretical. It's based on what we have in our backlog and those projects in our pre-con pipeline that have a high probability of starting this year. So I'd also like to highlight the importance of housing across both 25 and 26, and the major piece that plays in our total volume. We'll talk more about the importance of housing statewide and how that impacts our workforce challenges as well, but obviously a very big part of our kind of total portfolio. I think the other thing I want to highlight here is subsidy in projects. So a lot of the projects that are active have some form of subsidy, and many of those have multiple layers of subsidizing in their capital stack. So we're talking brownfields, we're talking historical tax credits, we might be talking low-income housing tax credits, we might be talking TIFs, but a lot of the projects that are advancing have some form of subsidy. If we group nonprofit work into that, we're starting to push up to almost 60% of projects that have like gifted money, foundation money in it. So super significant in terms of the work that's advancing. Right. This slide I probably don't need to share because we've all lived through it, especially those of you who are housing developers or working in the housing field. We put this slide together because this is where we had the best data of comparable projects. So this shows project data. This is multifamily housing in Portland or the greater Portland area. And the story, of course, is the doubling of price from 2019 to 2025 and the challenges that have come with that kind of a price escalation. Now, if you look into 2026, there's a little dot there, and I put that dot on there just to give some of you hope, but also to talk about the difference that geography and project requirements can make. So this is a project that we recently bid. It's outside of the Portland area. It's a very clean site. The site constraints, it's not difficult. The developer's really disciplined in terms of the product that they want to bring to market, and there's no exceptional project requirements associated with it. There's no, so the impact of those special requirements, whether it could be historical, it could be wage requirements, could be a number of things that could put in, oftentimes as a result of subsidy, often push the cost of work up. So it's just something worth highlighting. Okay. This slide tells a little bit about how we're thinking about 26 and what perhaps people can expect. It's the advice we would give as a construction manager. If you were coming to us and we were planning a project to deliver in late 26 or 27, we would be suggesting that you be carrying a 4.5% to 6.5% escalation contingency. Now that tracks, they say, well, why does that track above the other, projected inflation across the country? And I think the answer is it's just the volatility of the commodities in the construction industry, some of the challenges that Dave indicated around getting specialty gear, and the labor shortages. So those combined things I think will continue to put upward pressure on pricing. At the same time, I think we have a window here where we're seeing some of the more competitive pricing that we've seen in a while with strong subcontractor interest. So kind of talking out of both sides of my mouth a little bit there.
Good. Okay, so that sort of concludes our data presentation. We're now going to dive a little bit deeper into all of the things that have been talked about overall. And I think what everyone's heard in this introduction is that there have been upward trends in construction pricing. There's a growing demand for labor. How do we build more efficiently with less labor hours? How do we mitigate these challenges that are a deal only pencils if it has a subsidy? And then what Drew just mentioned, those subsidies are driving costs up. How do you qualify for those? What are the processes? What's the timeline and impact to a project if it needs to use a subsidy? And we're the oldest state in the country with an average age of construction worker at 47 years old. It's time to replenish the trades and really look at workforce reinvention. So all of those things are what we're going to now talk about in our moderated discussion now. And I'm excited to get going. So the first question that we have today is, what projects are moving forward and which are stalled or slow to move out of pre-development, and why? Dave.
So we talked a lot about subsidies, so I won't hit that, but the capital stack is incredibly important. The other piece is really a path to regulatory approval, a predictable path to regulatory approval. So the recommendation here is, if you're a developer, on a design firm, part of a construction management firm, it's really important that you have a really good plan and that you're communicating early and often with the municipality or the state about what your intentions are and what the path is to get you to an approval. I think it's incredible that, there's a lot of things that are constantly changing in the environment out there, but the jobs that are actually moving forward are the ones that have a predictable and clear path to get to an approval once the finances are all worked out.
Awesome. Drew?
Yeah. I think the projects that we see getting started are definitely projects that are driven by a clear business purpose. The business has been looking at expanding for a period of time. There's changes they need to be made. They can make the business case for doing so. And oftentimes those are companies with strong balance sheets that are even potentially in a cash position to advance work. So we see that work happening. I mentioned the projects that have subsidy that are happening. That's also true. It's also true that projects with subsidy are not happening. So real quickly, those housing projects which have federal funding in them, certain streams of federal funding are now under BABA requirements, the Buy America, Build America requirements. And those projects are pretty much dead in their tracks, despite the efforts from people in the industry at Maine Housing. And Maine Housing's been doing a great job of using other funding pools they have to advance those projects, but that money will run out and there's no clear path for those projects to move forward. So currently you probably, I'm just gonna guesstimate, probably have 9 or 10 projects that have been awarded under the LIHTC program over the last 2 years. None of those projects have closed because of this requirement around federal funding. So those are projects that aren't moving forward as well. Other projects I think that are moving forward are developers that have proven bringing a product to market. They have a demand, they have buyers in line, and they may have kind of specialty services tied to that final product, and those projects, or a very few of those projects, are moving forward. The speculative deals that have investors and you need to show your ROI, I think those have been difficult with construction cost and interest rates, and those have been slow to start. Not to mention those in the Portland market that have the constraints of inclusionary zoning. So those have been challenging.
Yeah, and Drew, you mentioned some of the hurdles with subsidy and new federal requirements with funding and local municipal regulation. Those are all things that have sort of been constraining development. Can you touch a little bit on some of the policy changes that have been helping projects move forward?
Yeah, so I'm not going to go into detail into the different different LDs, but I mean, because Elizabeth talked about this in more detail earlier this morning and much better than I would. But there were some significant wins that happened in the first part of the session in 2025, and they had to do not only with funding, but they had to do with removing kind of barriers and regulation. And there's a couple of working groups that have been established and been run by Greg Payne up at the governor's office, who had a long history of being a developer and knows the difficulties of getting projects built. And that working group, a lot of the people in this room have been in those working groups. We're talking about architects, engineers, construction managers, and the owners that know what it takes to get a project. And they've given a bunch of recommendations, both to code changes and regulatory barriers that the legislature now has an opportunity to act on. And then finally, I'll just say, I think what's new and different is that the business community, the broader business community, not those that are just in this room that do this business every day, are kind of stepping up because of the workforce challenges that they're facing. And they're saying, we need to see some results, and they're becoming a part of that. So along with that, I think we see this new coalition between the Portland Chamber, the Maine Chamber, Maine Affordable Housing Coalition, and MEREDA. And the lobbyists from these different organizations are now kind of working shoulder to shoulder in Augusta. And there's going to be wins and there's going to be losses. But the fact that this work is being done together, I think, is going to have significant results over time.
Great. And lastly, Ron, you only see projects once they're ready to go, once they're at the stage where they're actually moving forward with a bank. Can you just talk about volume and shift and what you've seen from a trend perspective over recent years?
Yeah, just in recent years, which we've really seen, we have not seen a lot of the bigger projects, like the $50 million plus projects, such as the Federal Street building and the Mercy redevelopment project. We have been just as busy, but not with the bigger projects. And I think a lot, from what I hear, most of those projects they're just not penciling for different reasons, either because of getting them through planning or the interest rates the way they are right now. So we are still seeing a lot of the, particularly, like I said, apartment and condo projects, and we're doing, on the residential side, we're doing a lot of big residential multi-house projects, mostly in York and Cumberland County and southern New Hampshire. But the difference over the past couple of years is we've just not seen the bigger projects going.
Great. So I think, one of the biggest things that's been talked about, not only on this panel, but also everyone in this room, is escalation. The hot topic of 2025 was tariffs. And so we're going to talk a little bit about, how has escalation, supply chain, tariffs actually impacted the construction market in Maine? And are there specific trades that are impacted? And, the bigger question, there's been a lot of talk in the news lately too about it, is like, are tariffs a reality? So Dave, I'm going to give this one to you first.
Great. So from an escalation perspective, the slide we have up on the screen here is a composite of data from Engineering News Record and PPI information. Basically, what this reads is, if you were building a $10 million project in 2019, it's a $14.5 million project today. So we certainly saw a significant jump in escalation in the 2022 timeframe. And if you jump to the next slide, you can see kind of the year-over-year escalation that we were seeing. So, as construction managers, we're try to deliver predictable information. It was very difficult to do that in 2022. We're back to a little bit more predictable, information that we can provide from an escalation standpoint. I think the information that Drew threw out there was we would support as the 4.5% to 6.5% per year escalation. We are seeing right now some interesting opportunities in the marketplace. We're in a little bit of a lull with the subcontractor community, and we are seeing some more aggressive pricing, but we do see that picking back up here again soon. So from a tariff perspective, we have been studying this as a company. This is a theoretical project that we put together and basically put on a large-scale residential project and looked at all of the different components of a building and look at all of the different changes that occurred in with the tariffs. We never got above a 3% impact for a total project cost, and quite frankly, it never really got to the ownership level, meaning the suppliers that we were working with and the subcontractors that we're working with were not passing those costs on to us, whether they were being more aggressive with their bids or it was very difficult for them to track and chase down what those costs might be to support any tariff claims. We just didn't see it, and we had projects when this first started about this time last year. Where we would set a budget to work against for tariffs, and we ended up giving back that entire pot of money to the client at the end of the job. So
I like that.
It really hasn't materialized. There's been a few little things here or there, but nothing of any significance.
Okay, so that was really helpful. And now, Drew, I'm curious to hear your perspective on this as well.
Yeah, I mean, I don't think I have a lot to add from David. I think that was largely our experience. I mean, I can speculate a little bit potentially about what happened, and I think it has to do with a bit of uncertainty, which resulted in a little softening of demand, which made subcontractors and suppliers more competitive, and so they did absorb. I think tariff costs, and most of those never reached the ownership teams at any kind of a large scale, small percentages, but disruptive.
Definitely disruptive. As a developer here, I can say that there's been a lot of conversations about something that, based on this graph, I wasted a lot of energy on. So I just want to, move to Ron's perspective, which I think is really valuable here, which is from a lender perspective, you're hearing all this conversation about tariffs and escalation, and you're about to approve a project with a GMP. What are lenders looking for? We've talked so much about how hard projects are to pencil right now. Adding in the contingency that Dave mentioned for tariffs, I can tell you there's no money for it. There's no space in the capital stack in the construction budget to carry a contingency or a tariff allowance that may or may not exist. And so as an owner, we're often like, we'll risk it. We'll not carry anything and hope that nothing occurs that will happen. Otherwise, the deal doesn't move. So from a lender perspective, what are lenders looking for? How have they been processing this over the past year, given the volatility of the conversation?
Yeah, so it definitely has been a hot topic from a lender perspective, and I wish that I could say that there's a golden answer to this. I've had a lot of group discussions with many of the lenders that we work with, and as both of these guys said, it hasn't really come to fruition where it's affected a project that we've been involved with. The few that it has, we're taking care of with either additional owner equity or maybe a bridge loan, but it was very few projects. But in discussions, I actually got to the point where I was calling around to insurance companies to see if either lenders or borrowers could buy insurance to cover escalation or tariffs, but they don't do that. So basically, it's just been a lot of pre-planning up front, trying to see if we could insert some additional contingency. But like Marika says, the lenders are looking at their appraisal and they're looking at their loan to values and all that. And on most projects, there isn't any contingency left than what's already in the project. So I think what's happened is that the lenders have just kind of adjusted the way they're doing business, and they're adjusting the way that they're approving loans to just, they're taking a little more risk, quite frankly. But excuse me. But as far as the supply chain issue, of course, during the COVID years it came on hard and it came on fast and everybody was scrambling. But I think what's happened now is most of the contractors have adjusted to that. For instance, they know it takes 12 weeks to get cabinets instead of 6 or whatever on a project. So that's kind of calmed down. And I think, quite frankly, since the beginning of the year, the tariff issue has started to calm down too, because there was a lot of buzz around it first quarter, and it hasn't really affected projects. So I haven't heard a lot about it lately or seen it affect any projects. One of the strategies that contractors have utilized to protect their bid day numbers, though, is to make plans with their suppliers, say like a Hancock Lumber, suppliers to pre-buy all of their materials based on bid day prices, and a lot of these suppliers are storing them for them. However, that means that the lenders have to put the money out because the money's needed to give to the suppliers to buy these. And they've been very creative with it, and I feel like the lenders have done a great job at changing the way they do things to make projects move forward with the current challenges.
Oh, great. That's a really interesting perspective. And I think as we move forward in this conversation, we think about the feasibility of projects. And, you know, Dave touched on it, and so did Drew a little bit, that subcontractors or vendors or suppliers may have absorbed some of the tariff increases that have existed, so they're not realized by the owner. But I think that brings us to sort of the heart of the construction market in Maine and anywhere, which is the subcontractor field. And in Maine specifically, we've always been challenged. We've always sort of been this niche market, given that we have the ocean, Canada, especially recently, and then, you know, Boston. So there's not a lot of places to pull from. So it's always relevant to sort of hear the thoughts and outlook on what the subcontractor field is looking like today, especially given the last few years in COVID, and what it's looking like in the future. How far are you having to reach to get competitive pricing? Dave.
So I'm going to start with a little bit more of a positive comment. I think it was a little doom and gloom at the beginning about the workforce. I'm on the board of the Associated General Contractors of Maine, and they have done a tremendous job in the last couple of years standing up a workforce development program. Basically in 2023, we didn't have anybody in the program, and now we have several hundred in pre-apprenticeship and apprenticeship programs. So there is a real momentum behind this, and I applaud folks that are encouraging their kids to consider, you know, a different path than college and join the trades. So that is it's going to take a few years to kind of get those numbers up. So like I said, it's going to be a bit of a short-term challenge, but there is some promise there. So from a subcontractor market perspective, you know, I hit on earlier some of the specialty trades. I think that's something that people really need to pay attention to. The electricians, the plumbers, the HVAC contractors, those are the trades that we really need to focus on. If we're trying to do all of these different types of construction and then layer in a data center or, you know, a hospital or a life science project that has sophisticated systems, that's going to strain that particular labor force. We have had, as I mentioned earlier, in the short term, we've had some better luck getting more subcontractor coverage. I would say that, you know, that's promising. We could see if things heat back up, if interest rates go down, jobs start heating up again. That could become a challenge with the demographics working in the wrong direction for us. So from a best practice standpoint, what I would recommend here is, you know, have a good plan going into this, but bring a construction manager on. The subcontractors, you know, they want to have a predictable plan. They want to know what the schedule is, how things are lining up, and they want to, you know, avoid any, you know, fits and starts in a project, either from a permitting perspective or anything else. So important for them as they have to really pick and choose where they're going to put their workforce.
Yeah, Drew, what are you seeing?
Well, if Dave started out doom and gloom, I'll go back there a little bit. I mean, one, I think with Dave, a lot of appreciation for the work that ABC is doing, the work at the community college level in terms of trade programs. But it is a math problem, and the math ultimately doesn't add up in terms of the number of workers that are exiting the workforce, those that are potentially coming in. And there's a lot of the trades that aren't going into specific trade programs, the folks that frame our buildings, the drywallers. And so I think I know we have a major gap and that gap is continuing to grow. So I think we need to get really real about that, and that know that what we're doing now is important, but it's not sufficient, and we need in-migration, and we need immigration rules and laws that support allowing people that want to do this work to do the work, because that's been a growing part of the Maine workforce. And when those people don't show up, we're feeling it. So I do want to highlight that. Our success has been built on our trade partners. They're all working super hard. They're doing a great job. We are finding that we're pulling from outside of the state a little bit more. We probably have 130 contractors that we work with on a routine basis. Probably 15% of those are now coming from out of state. I think the softening of the Boston market has helped us out here short term, but we really have to focus on this challenge ahead of us. I think a part of it is housing. A part of it will be innovation, as we'll talk about in just a minute.
Yeah, Ron, any final thoughts?
So building on what Drew was talking about a little bit, although we don't have a direct line to the subs like the contractors do, of course, but what we do have is we're visiting hundreds of sites every month. They usually have maybe 15 or 20 projects going. We're visiting that many, per week. And so what we are seeing a lot, although we're not dealing with the subs directly, what we are seeing on site is a lot more immigrant workers in the last couple years. And I think that it's, the way that the contractors are combating the labor shortage. And I think like Drew said, it's important that we utilize the resource, because I think it's the only way, or one of the ways I should say, that we're going to be able to get through this labor shortage and be able to get all the projects that need to get done, build all the housing that we need to build. So that's kind of what we're seeing from our perspective, that is coming to Maine.
Yeah, thank you. So I think the last question that I'll ask before we maybe have time for a couple of questions is, we're hearing lack of labor, lack of subcontractor, challenges with pricing. Pricing is dictated by time and schedule. What innovative ways are we using to get projects to keep moving forward? And this is another topic that we're all talking about a lot, which is prefabrication, panelized, modular construction. We would, I don't think we could have a construction outlook panel if we didn't talk about this today. So we're going to talk a little bit about what's out there now. What are you guys seeing? What's actually real? What's moving forward? Is it helping pricing? Is it not? And so I'll turn it to Dave first, do a quick definition, and then we'll move forward to some more conversation.
Could you jump back to the other slide real quick? Yeah. So this slide really represents the construction industry versus other industries from a productivity perspective. I think it's important for everybody to understand that, like, in the last 50 to 70 years, construction from an efficiency standpoint really hasn't changed much, right? Whereas manufacturing and other industries, their productivity and efficiency has increased significantly. We're working outside in the weather. That's a huge factor. We have several subcontractors, supply chain challenges, all of those things that kind of layer into the efficiency piece. I think there's some promise with some of the technology that was discussed this morning, and some of the focus that's going in on how can we get more efficient from the planning perspective and from a putting work in place perspective. And I think that there's some promise there. So I just wanted to throw that out there from just looking backwards from a productivity perspective.
I appreciate the continued optimism as me, a pessimist. So continue.
All right. So everybody throws out prefabrication, and I think it's important that there are many different types of prefabrication. Something as simple as a single trade, a plumber putting together something in a bathroom. To a full-blown volumetric modular piece. I think the thing that people are most familiar with is in the middle there are structural systems, wood frame projects, a lot of panelization there. You're seeing some projects on the commercial side have even more kind of layering of finishes on those exterior facade systems. But there are many different ways to do this, and I think that as you think about your project and think about the different opportunities you might have, there's a mix of these things that you could do on your projects to make them more efficient.
Yeah, that's great. And I think, as a developer, this is something that gets thrown around a lot to us. And I'm curious, Drew, if you can talk a little bit about, what would you want to communicate to a developer or someone who's not familiar with any of these approaches, or, maybe specifically volumetric modular, sort of the more intensive ones that are being sort of pitched right now as the future and the way forward. What do I need to know?
Yeah, well, you mind just going to the next slide real quick? So I'll just be really focused about this. So first, this was our first project using full modular, done with the New Height team, and that worked in conjunction with a group of community leaders, businesses up in the Booth Bay area to address both the housing and the workforce challenges they were having there. Super excited to be there with KBS was a great partner. We had concerns. I'll be honest, I had concerns about having so much trade risk with one particular partner. They were excellent about helping us understand those risks and making us feel comfortable with the financial guarantees that they could offer us to get us comfortable, and ultimately the owner comfortable. Cost savings on the construction side, we didn't see direct construction savings, but we saw, we were able to shorten the schedule considerably, which I think ultimately created total project savings to the development team in terms of their interest carry. Great process. I think when you do it on a commercial scale, you need to know that you're going to have somebody who understands, project management. We did a lot of tours at the manufacturing facility to make sure that the project was being built to specifications, and then you need to have on-site coordination in place, because while the buildings come, it's amazing how complete they are when they come done, but there's stuff to do. And this definitely holds promise for Maine. I think we have a few challenges there. If we're going to really experience the kind of the cost benefits of modular, we'll have to have more manufacturing facilities within close proximity to where the housing production is taking place. We'll ultimately need to have more housing production to kind of justify the investments needed for those manufacturing facilities. But it needs to be a part of the solution. I kind of think of it, 10 years ago, we had framers on site and we were stick framing buildings, right? And then we slowly in the residential field, you started to see some panelized construction. Now you don't see a project being built without panelized construction. Maybe a little bit on the residential side, certainly not on the commercial. So hopefully that will be the evolution with modular. But it's not a silver bullet right now for the cost challenges.
Great, and here's another sort of case study to demonstrate.
So at Colby College, we too worked with KBS on this 200-bed, it was a 50-bed separate buildings. And I think we got a phone call in the summer, and we needed to deliver these beds the following summer. There was no designer on board, there was no permitting, there was no nothing. It was, the mantra was, we need heads in beds, heads in beds. We are overcommitted at Colby College, and we need more folks there. So what's interesting about this project is, we were excavating the foundations on one side of campus. We were site casting precast foundations on the other side of campus while the modules were being built off-site. So if you can think about the compression of the schedule there, that there's tremendous opportunity. However, you really need to front load all of your decisions, and you need to make sure that all of those are locked in, because once all of that starts, you really don't have an opportunity to change anything, right? So you can't go in and look at the open stud walls and say, I want to move that outlet, because it's been done in the other 199 rooms already.
Well, developers don't change their minds, so that shouldn't be an issue.
That's true. Yes, you're absolutely right. Yeah. So this was an incredibly successful project because time mattered, and we were able to deliver 100 beds by the fall semester and another 100 beds for the following winter semester. So.
I'm going to let Ron sneak in here at the very end with 30 seconds left, just to talk about how this has impacted the financing approach.
So again, from a lending perspective, there's new challenges from a lending perspective on this, where it's just kind of a new normal where, my advice to the developers out there is that, if you have a lender that you've been working with for 20 years, but you have a modular project coming, just make sure you prepare them for that, because there's a whole different, way that, from a lending perspective that you have to go about it. For instance, like these guys were talking about, sometimes the factories are hundreds of miles away. And of course, a large amount of the loan proceeds have to be out early on in the project that are all going to this modular factory. So, some of the things that we've been doing is, as a company, we've gone out for the lenders and we've gone to these, manufacturing plants and we've inspected for them, so it reduces the risk a little bit. But I guess it's one of those things where we've done very few of these to date, but I hear a lot more of these projects coming. Actually, we worked with Zach on this project that Drew was talking about, but we already have 3 or 4 more in the pipeline. So from a developer perspective, I would say make sure you're making your lender aware that this is going to be a modular project so that they can prepare for that. And from a lender perspective, just make sure that when you're talking to committee, you make sure that you let them know that, it's going to be a different process than we're normally used to.
Great. Well, thank you everyone for joining us and listening. I hope that we split up the optimism and pessimism somewhat equally, but if you're in this room, you know what you signed up for. So I don't think we have any time for questions, unfortunately. We just love talking about construction too much. But thank you all for coming, and feel free to find any of us after if you do.